Welcome to The Explainer. I am so glad you're tuning in for this. Today, I want you to picture me as your personal, calm, and maybe slightly overly experienced financial advisor. We're going to work together to help you graduate from that anxious, always checking the market mindset to a system that is highly sustainable and honestly, incredibly peaceful. So take a deep breath, settle in, and let's fundamentally shift how you approach your portfolio.
Okay, let's dive into this. Think of today's agenda as a syllabus that's going to move you logically from a stressed-out mindset to an automated, completely boring, but highly intelligent practice. We'll be hitting the overcomplication trap, Tina's shift to calm, the 15-minute monthly routine, boundaries and your simple log, and finally, your 7-day habit blueprint. Let's get to it.
Section 1. The Overcomplication Trap. Now, what's really interesting about this is how common the anxiety is, right? When you're stepping up your investing game, it's so easy to fall into this trap. You falsely assume that being a responsible investor means you absolutely have to be glued to the markets every single day. We buy into this myth that more research automatically means more safety. But actually, behavioral finance research tells us the exact opposite. Frequent trading, it literally reduces returns for individual investors. Why? Because drowning in too much information just leads straight to indecision, unnecessary tweaking, and emotional errors. The reality is, the best investors out there actually monitor their portfolios way less than you think.
Which brings us to Section 2, Tina's shift to calm. Let's look at a quick cautionary tale.
To show you exactly what this trap looks like in real life, let's talk about Tina. Tina learned the hard way that sweating over your portfolio does not equal better results. She wanted to do everything perfectly, so she went all in. Subscribed to every financial newsletter, watched the daily market updates, checked her account every single morning like it was the weather forecast. And sure, at first, she felt really proud. She felt like a serious investor. But pretty soon, reading those daily headlines about inflation, interest rates, and recessions, it made her second-guess everything. She started making these tiny, reactive changes to her ETFs. Eventually, this whole thing morphed into an exhausting, incredibly stressful second job. It led to absolute emotional burnout. She wasn't doing anything wrong in terms of effort, she was just completely overloaded by noise.
But here is where the story turns around. Tina finally hit a wall, realized what was happening, and drastically simplified her entire approach. She wrote down a strict monthly routine, proofed her purchases, and then, this is the absolute kicker, she closed the app. She just stopped using market research as a way to get emotional stimulation. And guess what? She didn't become a worse investor, she became incredibly consistent. Tina proved perfectly that investing isn't improved by constant daily attention. It's improved by calm, predictable repetition. Honestly, being boring is actually the highest form of investing intelligence.
Section 3, the 15-minute monthly routine. Let's get you set up.
So how exactly do we get you to where Tina is now? Well, first we have to understand what we're fighting against, and that enemy is behavioral risk. Simply put, this is the risk that your own emotions are going to cause you to completely abandon your long-term plan. As humans, we are biologically hardwired to want to buy when the markets are shooting up because, hey, it feels safe, and we want to panic sell when things drop because it feels terrifying. A strict, scheduled, unbending routine is your shield against those completely natural but completely destructive emotional urges.
So the crucial point here is the number 15. Exactly 15 minutes a month. That is the absolute sweet spot. It's long enough for you to be intentional about what you're doing, but it's short enough that you can stay perfectly consistent. Think about it. 15 minutes is shorter than your best excuse for not doing it.
Let me walk you through the exact 5 steps of this monthly routine. Step 1. Confirm your money pipeline. That takes about 2 minutes. Step 2. Confirm that your deposit actually arrived at your brokerage. Another 2 minutes. Step 3. Place your ETF purchase or just confirm that your auto-invest fired off correctly. Give that 5 minutes. Step 4. Record the action in your log. 3 minutes. And finally, Step 5. Just do a quick emotional check. 3 minutes. That is the whole shebang. 15 minutes total. You need to think of this routine like checking the batteries in your smoke detector or brushing your teeth. It's simple, automated maintenance. It's absolutely not a daily hobby.
Moving right along to Section 4, boundaries and your simple log. We need to protect this routine. Having a slick checklist is great, but without some serious guardrails, this routine will just balloon right back into an anxious daily obsession. So enter your do not do list. I'm going to read through these anti-trader boundaries a bit firmly, but know it comes from a place of care because these are absolute deal breakers. You do not check charts daily. You do not treat investing like an exciting hobby. You do not try to optimize your portfolio based on whatever the headline is today. And you absolutely, positively do not read the financial news right before you make your monthly purchase. Look, your only job here is to keep showing up. It's not to predict market swings. This right here is the ultimate method for safely avoiding that daily news trap.
And this brilliantly illustrates why you need to enforce those boundaries with some simple documentation, an investing log. It's unbelievably basic, just 5 fields. The date, the amount you invested, the ETFs you bought, your target allocation, and, this is the secret sauce, notes on your emotions. Just jotting down whether you felt super anxious or really confident that day is a game changer. Keeping this 5-field log builds massive confidence over the years. It tracks your behavior, and it does it without creating a mountain of extra work.
The absolute key here is to keep your recording tools incredibly simple. I highly recommend using specific distraction-free tools. A basic physical paper notebook is fantastic. Or just use the default digital notes app that's already sitting on your phone, like Apple Notes or Google Keep. Whatever you do not keep this log inside some complex financial platform that's covered in flashing red and green numbers and blaring breaking news alerts. No way. We want you far, far away from all that market noise when you're doing your calm maintenance.
Let's wrap this up with Section 5, your 7-day habit blueprint.
Let's move to this slide and see how this all builds together. This is a self-paced schedule designed to really anchor your new routine to a predictable cue. Day 1, you just design your checklist. Day 2, pick a specific date each month. Maybe you always do it on the 5th. Day 3, set a recurring calendar reminder so you don't even have to remember it. Day 4, pick out that physical notebook or set up the Notes app. Day 5, just do a dry run of the 15 minutes. Day 6, adjust if anything felt a bit clunky, and Day 7, you are fully locked in and ready to go.
Now, as a financial advisor, I know for a fact that the temptation to check your phone is still going to pop up. It happens to all of us. So I want to give you a very short script to help you set a healthy boundary in your own head. The next time you feel that urge to tweak your plan because the market is doing something wild, I want you to literally say this out loud to yourself. Checking daily does not improve returns. It improves anxiety. I follow my routine and move on. Seriously, use this self-talk as a practical tool to just shut the door on the daily noise.
I want to leave you with one final provocative question to really chew on today. So, what does this all mean for you? Well, what would future you thank you for doing today? Would they thank you for constantly stressing over daily charts and burning out like Tina did? Or would they thank you for abandoning those exhausting habits right now in favor of building a sustainable, incredibly calm 15-minute habit? The path to quiet, confident wealth starts right here. Thanks for joining me on this explainer.